All right. I think 5 minutes is long enough to give everyone a chance to enter. So I'm going to share my screen and we can start this. Let's up the quality real quick. Sorry about that. There we go. Can you guys see it all right? Just give me an answer directly in the chat. That's perfect. Awesome. Awesome. All right. So we're really going to go top down today. This is the first daily review I'm going to be doing in the Rise Mentorship Discord. So if you guys have any insight, have any things that I'm missing, feel free to say it. But starting right to the really beginning of it, right, on a weekly chart, there's not much information for us here. If we compare ES and NASDAQ right here, I believe I see a small fair value gap. Let me just double check that it is indeed a fair value gap. Looking at the open, high, low, close values, low of this candle is 49.37.75. High of this candle is 34.25. So this is indeed a fair value gap. It's so tiny that I have to zoom in like that to bring it further. But our weekly move was internal to external, targeting previous week highs right here. As well, if you have any questions during, I'm always looking at chat, so don't be scared to put them in. As for NASDAQ, we dove lower right back into that fair value gap. I believe that is consequent encroachment right here. Almost. That is too far for me to consider that as consequent encroachment. A three handles is good enough to say that it hit it, even though it's three handles away. That's a margin of error, but that's more like 11 handles. So no, that is too far. But simply, I have an internal to external move. We completed it right here, returned towards internal liquidity, and are still respecting it, telling us that we do indeed have higher objectives for price. Let's say we go down now to a daily chart. There's a lot of information which we can take from here. So the first thing that just stands out big time is this SMT right here. If you look at my cursor, you'll see that from this low to this low, that is very strong SMT between NASDAQ and ES on a large time frame like that, indicating that the low has been put in. So NASDAQ took out that liquidity, while ES showed its strength by not taking out that liquidity. These are the same specific levels I'm looking at, and this is the Wednesday candle, by the way, right here. So we do have a Wednesday profile in play, a Wednesday reversal profile, and it was pretty clear to see from this point on that we were going to continue higher towards external liquidity, as we can see that ES has taken its external liquidity from the range. As for NASDAQ, and just to bring additional confidence to that, in my midweek analysis, I talked about it, but I'm going to add more insight to it. This we left open. I was looking specifically at this new day opening gap from Tuesday, the 30th of January to the 31st of January. This new week opening gap was a strong draw to me, early week. So I did trade on Wednesday, took a small trade towards that new day opening gap, that liquidity void, which is more of a volume imbalance, but we'll call it a liquidity void for now. So this was a strong draw for us. When we see that level being respected, we see SMT. We have this daily order block as well right here, which we did not reach main threshold of, indicating that we are respecting that order block. Once we move forward with that and we have strong SMT on a higher time frame like that, I could justify a framework on NASDAQ of external to external, which would mean a reversal, right? So instead of looking for an external to internal, so I would be trading a retracement to this order block, for example, I'd be looking at external to external because I'm expecting a reversal at that level, and I have my SMT between NASDAQ and ES to confirm said idea. And if we were looking specifically at ES, we can see that clearly compared to both ranges, ES was much stronger. It was much easier to go up at that specific time. I'm just gonna change the setting real quick. All right. So from the daily chart, it was a very clear bullish signal. Anyone that traded a short, I know some of you did today, but it was very clearly bullish. I did not even consider trading a short retracement because that would have gone and stopped you out, as you guys know from your results from today. If we even go down to a 4-hour just to have more insight into price, we can see this fair value gap right here is what I was looking at specifically when I was trading today. So I was looking at this fair value gap. Let me just change the color. Was looking at this fair value gap on NASDAQ. I don't trade ES so much because even if ES was stronger in this case, it would have provided me lower risk to reward setups than NASDAQ did, because my precision is the same whether I'm on NASDAQ or I'm on ES, but ES is way less volatile. If we dive deeper into our 4-hour, we can see right here, after diving into this inefficiency for another time, taking out these relative equal lows right here, we formed a market structure shift. Right here, we swept this liquidity. We can see indicating very much strength. We have no close through this low, even though we took out that liquidity. We ran for the stops below this low this aggressively. And right here, we have our market structure shift. Let's try and make that a little smaller. Our market structure shift right here. So this was additional confluence. This is Wednesday's price action. If you see right here, this is the Wednesday 2 p.m. 4-hour candle. We have more confluence that we're going there. But once we head to a lower chart, we'll notice that London did a big move today. And that's why we'll also be looking at this specific inversion fair value gap right here. And if you look right here, this is this morning's 4-hour candle, the New York 10 a.m. candle right here. And I would have used that specific level. So if we go down right here to my main layout, we can tell from, let's head over to a 15 and actually draw out the 4-hour inversion fair value gap. Actually, we're going to leave the 15 and all of that and not look at it today, because the 1 minute gave you plenty of context for the higher time frame movement in confluence with the higher time frame movement. So if I go right here to my 1 minute chart and look at the range, let's just go to the 5 minute and look at London. Actually, right here you can see from my indicator, this is 2 a.m. to 5 a.m. This is the London area, the London range where I'm looking at. We can tell that we've had a large overnight move starting at 9:30. Our daily range was already 142 handles, which is a pretty big overnight move, which doesn't tell me that I cannot trade during New York, but it does lower my expectations for New York, and I'm going to be requiring a better setup, right? But this is our, let me just mark it out so it's easier for you guys to understand. This is my bullish fair value gap, bullish inversion fair value gap in my 4-hour time frame. So I'm just gonna have that here so you guys can know what that is. But from the 9:30 open, I was looking for price to take out liquidity. We also had 9:45 news. Let me just mark it out right here. I do have rules to trade before certain types of news, but I'm not gonna get into it today, at least. Right here, I'm gonna also mark out the 8:30. We had unemployment claims at 8:30 and PMI at 9:45. So based on the basic rules, we would wait 10 minutes to be trading after the news. So just from a 5-minute chart, what can I already see? Well, I can see we took out this liquidity and this place higher at the 9:30 open. I'm expecting 9:30 to be a Judas swing. So this Judas swing down, taking out liquidity, I believe we did not reach this low, but we went to this one right here. We took out multiple liquidity at 9:30 and then displaced higher. If we go down to a 1-minute chart at the 9:30 open, as you can see from here, this is 9:30 to noon. This is New York AM. So when we took out that liquidity, we can see that we engineered liquidity right here through consolidation, went up, and then Judas swing at 930. This is the 930 candle. Judas swing down, taking out this liquidity as well, and then displacing higher. 945 news ran on side, which you can expect price to stay stuck in a range after that for a certain amount of time. But what we were concentrated on was 4-hour power of 3 right here. This is 10 a.m. This is a 4-hour candle open. If I go in the replay mode, let's say right here, so we can have the indicator showing us the 4-hour candle. They are loading. That is fun. There we go. So this candle right here is my 4-hour candle. I'm either going to go further back just so we can see it better. There we go. So I have my 4-hour open right here. 4-hour candle open. Let's put that like this. And what do I expect from power of 3? Well, it's pretty simple. I expect that there is consolidation to engineer liquidity. Then I will see a manipulation to allow me to predict the distribution, right? AMD, accumulation, manipulation, distribution. Cool. Well, if I understand that, then what do I understand from this price action? We opened right here. We trolled in a range so as we did right here. So I have my accumulation. When I'm looking at 4-hour candle power of 3 anyways, maybe my accumulation would last a few seconds. But I'm not trying to frame manipulation. I'm trying to see the manipulation, not trying to frame accumulation. I'm trying to find the manipulation to see if it's on side with my trade idea that was already established. What was already established? We're bullish up to daily and 4-hour external range liquidity. So I'm actually going to go mark out those levels real quick on this chart so I can see them. I'm going to mark out this daily buy side as buy side liquidity, and I'm also going to mark out this as just daily external range liquidity. So daily ERL, and go back to a 1-minute chart. So looking back at this morning, continuing here, I don't have the indicator anymore that's showing me, so I'm just gonna put that back on real quick. But what I can tell from that 4-hour power of 3 is that we opened and then we ran down, taking out multiple aspects of liquidity. We are at the same time making higher lows, which is bullish. If I look at ES at the same times, I believe it was doing the same. I don't think there was SMT this morning, or maybe there was actually. What time was I looking at? Let me take out this real quick. Right here we have 10:03, 9:55. If we look at ES here, 9:55 and 10:03, we did the same thing. There was SMT later on, as we can tell right here, 10:03, 10:10. With the 10:10 right here. So I am going to mark it out in advance, and we are going to dive deeper into it a little later. But what we can see from this, we have our 4-hour candle opening into a 4-hour inefficiency, right? The inversion fair value gap we marked out earlier on our 4-hour chart. So if we're respecting this inversion fair value gap, I'm expecting us to continue towards what? Towards that daily external range liquidity. We also have a new week opening gap right here, which I understand is a strong draw for price. And even further down the line, we have our buy side liquidity, which would confirm a reversal, which is, this is pretty much displacement above this high, is a higher time frame market structure shift. So looking at this, we have our news right here. No Judas swing, we just went straight on side. Then we have our fake move, 10 a.m. open, 10 a.m. manipulation. So I am now expecting it to run higher. With this expectation in mind, what do I have forming right here? A breaker block. So right here, I have my bullish breaker. I'm going to mark it out just like this so I don't start painting too much lipsticks on the chart. But this is my breaker block. When I have my breaker and I'm trading the unicorn, which is the model I teach to my students, what am I looking for? I have my premium and discount right here. And I'm going to be looking for the first discount inefficiency to have a high probability setup. I have this right here. I also have this inverse fair value gap. So I'm going to mark out the inversion fair value gap because we can clearly see the fair value gap, and I don't want to have too many drawings on my chart. I'm going to mark this out. I'm going to delete the breaker. As you can see right here, we had specifically, I'd be looking at this range. So this low to this high, I have A to B, then C, which is the manipulation leg. And once we trade above this high, this now becomes a breaker, the last up close candle of this small range. I'm going to delete that though to get it out my way. Inside the inversion fair value gap, here. Still, I'm always messing around with my templates, but right now I'm trying to make it a little clearer for you guys so you can tell what I'm seeing without 1,000 drawings that I'm putting on. So right here, we retrace into OTE, more specifically. This leg tapped into OTE. But as soon as we tap into that inversion fair value gap, no need to retrace to this fair value gap, and there's SMT, that's an entry. So in my eyes, the first entry was definitely here. Stop loss is very clearly at the low of this manipulation, which is our 4-hour candle low. This is what I'm calling as a 4-hour candle low. I believe we traded lower, but that is what I would be looking at. Another possible entry would have been just waiting for this fair value gap to get tapped in, which happened later, but it did not have to, and the stop would be at the same place. So let me just put that back. There we go. What would be a good low-hanging fruit? Well, it's pretty simple. This high. But why this high? Well, first of all, it's 945. I would call that a data high, but it's also our opening range high. More so, it is also our dealing range, our current dealing range. So when I'm saying a big range, when I'm looking at premium or discount, I'm going to be concentrating on this specific range right here. Why? Because that's our dealing range. Took out sell side liquidity, took out buy side, and then we're expecting a retracement to that. And if we're bullish, we're expecting it to continue higher. So looking at this specific premium and discount, that's how I could understand that right here. We're going to keep going afterwards. Also, a big thing to point out is that at 9:55 on my 5-minute chart, as you can tell, we were just retracing to a fair value gap, a bullish fair value gap. So this low was put in through a 5-minute, exactly 5-minute unicorn. Right here, you have your beautiful breaker. That's all lining up. But I never enter based off those higher time frame unicorns, whatever. I'm waiting. I'm seeing that retracement. I'm seeing that confirmation, but I'm waiting for 1-minute confirmation on that. So I could dive even deeper, but the SMT is definitely the biggest one between the two. Right here, it was just consolidating though. But I would have this high as a low-hanging fruit objective right here. This dealing range high is my low-hanging fruit. Let me just mark it out. Let's just call it low-hanging fruit objective right here. So that was the easy target to be looking at. And of course, now with hindsight, it's easier to tell. That's why I went also in replay mode, because if I leave that replay mode and look at that specific time, you can see that it would have stopped you out after hitting that objective. But at least a few of my students can know I have a beautiful picture of me before this happened, and I marked that out as low-hanging fruit objective, so I guess you're just gonna have to trust that. This was the first possible setup, in my opinion, if we're only talking about unicorn. As you can tell right here, after the Judas swing up, we repriced to a fair value gap and then continued higher. That to me was not the highest probability trade of the day, for sure, but it was one of the opportunities. Another thing that happened, when you're in this trade, you're expecting it to run all the way to buy side. Especially right here, as you can tell, I have marked out my standard deviations, and I have the confluence of the standard deviations pointing me towards daily RL. And as well, I believe that if it goes to that -4, which is my terminus, I'm expecting it to run 10 candles further and target that buy side. So even if that was your objective, you should have still taken profits right here, paid the trader, and probably be done with your day by then. But there was other opportunities, especially since we're still respecting that inefficiency that I'm concentrating on. So let's say I remove that drawing for a second and we look at what happened later down the line, specifically during the 1050 to 1110 macro. That's a time where I know there's going to be algorithmic delivery in price. So I'm concentrating on what price does during those specific macro times. I'm going to mark them out pretty simply with just lines so you can see it better. I'm looking for price to engineer liquidity within that time and give me another opportunity, because even if we trade below these lows, below this low, even below this low, my idea is still valid. Why? Because I have my dealing range right here. And I understand that we can retrace another time after we took out this. So from that point on, I'm still thinking about the big range. I'm still thinking, hey, it could go all the way back down. It could go take out this low into this fair value gap, order block. It could still retrace lower. With all that in mind, looking at this specific macro, I'm going to mark out the same on ES, because there is an important thing to note. SMT will always bring confluence to your trade. And as you can tell right here, I have my, this is the 1101 low that created equal lows right here. This is 1049 is lower than 1045. If I look right here, I have 1045, 1049, which is lower, but then 1053 is way higher. So technically, that is not SMT, right? Because if I look at the low of this candle, say I move that out, if I look at the low of this candle, I have 5067.5, and right here I'm gonna have 5067.5 as well. So we have not taken out this low. But then I dive even deeper, right? You could have hit that range 2 times. I feel like an even bigger idiot. It's okay. It's okay. You know, I'm not pointing you guys out. I'm not naming you out. But today was a clear bullish day. You know, no shorting on clear bullish days. Get back into it. Yeah, of course, I'm looking at very specific 1 minute SMT, which will not always be the best. But if I'm looking at 1054 right here and 1049, it's the same thing right here, higher, but then here. That's the big one. That's the one where I would say the algorithm is tipping its hand to you. So I have the 1053 low and the 1058 low. And right here I have 1058, which did not create the low, but I'm going to be looking at this one. That's why I like to concentrate on 5 minute SMT often. And I have 1053. So I'm comparing these two. Let's say I look at the 1101 candle, is probably this one, right? Yeah. So I have strong SMT indicating that NASDAQ is more bullish at that specific time. But what else can I use? Well, because ES took out this low, I can consider NASDAQ to have taken it out as well. So technically, when I'm looking at A to B, I'm expecting this to be taken. Well, I'm treating it as if that was taking. So this specific candle is a breaker block. Nonetheless, you didn't have an entry right here. You could have used this inversion fair value gap, which got disrespected twice. But the real entry, in my eyes, I would have been looking at this breaker block. That's the easy one to spot. You use SMT right here as confluence. Once we trade above this high, look how clear it is. I have one fair value gap, one inefficiency right here. And yeah, due to volatility and the size of the fair value gap, we ran through it. Doesn't matter. I'm still entering there. So I could have entered right here at the end of the 1050 to 1110 macro. Where would my stop loss be? Well, I teach to you a 3PD array rule stop loss. So I would be looking at this fair value gap, this inversion fair value gap right here. So let's say I just draw it the low so I can tell where it is. This inversions. And I would also use this fair value gap as my last one, so my stop loss would be at the bottom of this candle to allow for these 3 PD arrays to be disrespected. 4 candles to the left. What do you mean 4 candles to the left? Oh, yeah, well, yeah, right here, right? Makes sense for the stop loss placement? And if you're a New York student, don't worry about it. It's okay that you don't understand these. As I said in the last call, the further we get in the mentorship, the more you'll understand these things. again, what would be a low-hanging fruit objective? Well, at this point, I think I'm already at a 200 handle range, right? Let's go look. I'm going to have my little indicator pop up, my daily range. By the way, if you want to know, that's higher time frame power of 3 by 2 degrees. So I'm already at a 200 handle range. So yes, I would like to see it run another 100 handles on side to the buy side liquidity up here. But since we are still at a big range, and I'm not taking the first trade, right? I'm later during the day. I'm not going to expect the biggest moves from this. So my low-hanging fruit objective at this point would be the previous high of a big range, if I could say it like that. So that would be my low-hanging fruit objective. And as you can tell, that's a very beautiful 4R trade. Ain't no one gonna complain after 4 Rs. And what did you have? Well, I had SMT. I had my breaker block. During macros, I had my element of time. And yes, the 4-hour power of 3 after seeing this big move down is not very clear. It's just consolidation, right? It's back and forth. But we still haven't taken out this low, which would indicate we could go further or we could reverse. We're still respecting this area. We're still respecting this bullish inversion fair value gap. So that's just telling me that it's reaccumulating within this range to continue higher afterwards within this inefficiency. But yeah, it was a beautiful day filled with opportunities as long as you did not short. Which is pretty sick, as you say, Matt. Further down the line, I have this low-hanging fruit objective, but I'm still using standard deviations from here, and I can even use standard deviations from here. So I have confluence right here. After taking out this low-hanging fruit objective, it could reverse. So I'm going to be careful and take profit right here, but also have my daily ERL right here. That's going to be a strong target. And if I draw those standard deviations utilizing the bodies of the candles, you can see that, well, you can't see it now, but you can see that I have also confluence to that specific level. I prefer using the wicks more often. So let's just say I'm already in replay mode. I just let this run. You would have seen consolidation into lunch, which is fine, right? You're expecting lunch to either consolidate or reverse 90% of the time. But if we're accumulating before lunch and then manipulating under that consolidation, yes, indeed, Matt. Indeed, you just have to test the model sometimes. Losing 6 trades, I guess. But yeah, so we consolidating into lunch, took out the low of this range, so I could still anticipate lunch to run higher. Let's just say I take off this and I just keep on running the replay. You'll see that we also hit our next objective, which was that daily ERL. Oh, I thought we hit it right there. We induced it for a little and then ran through it and actually kept going further to that new week opening gap. Standard deviations right here are there. But at this point, 270 handle range, I can't really expect it to go this far. So at this point, I might have a runner on. But another big confluence is the new week opening gap being respected right here. Then we have our 2 p.m. power of 3 open. And then this is, we just expanded higher. We're trading inside that range. Lower manipulation, respecting this order block, and then push higher. I don't know if it went back down. I believe it did. Yeah, as we can see right here, we consolidated for a while during the afternoon. But as ICT said it best, early in the year, the PM sessions will be very low probability. And as we've seen from the beginning of the year, most of the PM sessions, all they do is consolidate, accumulate, engineer liquidity, and then the last hour does the move. That's mostly what happens during all the days in the past the past 2 months pretty much. But you didn't care what it did at that point. Why? Because you might have had that first trade even if you missed it. You had 4R right here, and then continuation towards daily ERL, which is a 100 handled trade almost, 8.61R on that second take profit. From this point on, you'd either be fully out or have one tiny contract left. So you wouldn't be mad that it didn't take out the future buy side, you'd just be like, well, shit, it's going to leave it for London tomorrow, Asia, or if you're lucky, New York tomorrow, and give you an opportunity to trade it. So, price action was super clean today. The only way you could have got fucked up, if I can say it like that, got stopped out, is if you weren't concentrating on your bias. And as we've seen from our higher time frame charts, the bias was super clear today. I'm going to delete all these drawings and go back to a daily chart real quick. And let's just say I remove my new week opening gaps. You had very clear SMT between ES and NQ right here, right? We looked at it, not yesterday. We looked at it earlier, right here. You took out liquidity into a higher time frame inefficiency, which you are respecting. This bullish order block and displacing higher. Low-hanging fruit could have been this, but if you understood what we were currently in, I also use seasonal objectives, seasonality objectives. So I was understanding that we have to run up now. Until when? Until March, right? March, low of year, would be a very interesting thing to see, lining up with seasonality, but we're not going to go this far into analysis because we're just doing a daily review. But yes, as you say, Emil, next objective, very clear. The only thing is, ES already took that. So I can anticipate that NASDAQ will probably consolidate a while to take that high. It oftentimes does this. If ES takes it first, now NASDAQ has to catch up to that high. It will often be ES consolidating close to that high, and then NASDAQ trying to catch up and having a hard time. So New York Open tomorrow will, I will definitely require a lot from New York Open tomorrow if I'm trying to trade it. And anyways, to me, it's a half risk protocol, low risk protocol, whatever I call it. I haven't decided on a clear name already. But I'm going to be trading one contract with one chance. If I just look at this very quickly and look at the weekly candle is what I want to see. But why is it opening on Wednesday? That is clearly a bug. Okay, so the indicator is kind of lagging for some reason. I'm going to go back to NQ1. And it's not going to be lagging anymore. Let me just put those settings back. If not, I'm going to be confused when I'm trading tomorrow. 4 hour and daily power of 3 is what I'm looking at. Zoom out here. Go here. I don't have the indicator on this chart. Give me a second. And 1 week using midnight open, and it's still doing the same thing. So I don't know why the indicator is lagging. Probably because there is no Monday because of the bank holiday. SBP, small balls protocol. Okay, buddy. Okay, Matt. We'll compare results tomorrow. How about that? Huh? And then you can call me you call my protocol SBP. Yeah, indicator is clearly tripping, but it's kind of hard to mark it out now. Maybe if I go in a 4 hour chart, yeah, there we go. Now it lines up to Monday open. So we've had a clear open, low, expand to a high. So I'm still expecting tomorrow to be continuing higher in line with our weekly profile, which is a Wednesday reversal, which tells us that Wednesday through to Friday will be our weekly expansion. So I'm going to be looking at Friday to also continue higher. If I'm looking very quickly, because I don't want to give too much insight, I'm looking very quickly. This is the Friday candle, so we have not created a fair value gap yet. Looking at our 4 hour, I have this fair value gap, which is interesting, but I'm going to be looking for possibly a retracement within this range. What would be the best, in my opinion, is that we still respect the same 4 hour fair value gap, which we would have used this morning to long. So I'd be looking for us to go in there, but that's a pretty tight range for a full Asian and London trading session. So we'll have more insight tomorrow morning, see if this daily ERL has already been taken. If it has, I'm not going to be considering any trades, not even a TGIF, because I think it's going to be high resistance if we start retracing lower, because it's going to have a lot of upside pressure. Yeah, might be a pullback into the FVG in the 4-hour. I don't know if there's a daily inversion fair value gap. Yeah, this one, but that's a Reaper. That's not the same. So yeah, no, I'm not going to be considering anything tomorrow unless it's a long to this ERL, and that is again all-time high. So we don't have anything to the left. We've just been trading in all-time high conditions. Probably going to be like that for most of the year, at least, being election year. Do you guys have any specific questions about what I said today? Specifically that. Please God, don't let ERL get taken out by New York Open. You know, sometimes in the best cases, we just see perfect inducement of that level and then a retracement into a 4-hour PD array by New York Open. That would be beautiful for tomorrow's trading. Get up here, Matt.